Okay, Bubby, you got a question for Turd?
Yes, I have another question from Aaron B. Dan Orsini has pointed out that hedge funds are long metals and short the mining stocks as a hedge. Question:
Yeah.
At what price or time do you see this hedge having to come off?
I can't give you a blanket answer because as I understand it, all the hedges are too specific. And so to give a general answer to situations that were set up with specifics, I don't think I can. And what I mean by that is, as I understand the trade, an effective hedge fund manager ratio trade would be to take a miner that is fully hedged and limited in their, and therefore limited in their profit and earnings per share participation as metals go up. I mean, if you've sold forward all of your production for the next couple of years at $900 an ounce, it doesn't help you. It doesn't help you to have the metal going up. And so your stock price shouldn't be going up either, right? Because stock prices are ultimately determined by, most of the time at least, by earnings per share. That's one of the key metrics. So if I know that a certain miner is fully hedged at $900, there's no reason to expect a rising metal price to drive their share price up. Maybe it'd go up a little, but not nearly the same percentage and not nearly the same amount of money that you can make through leverage of buying gold contracts. So the ratio trade, and this is where I said it's specific, you might short a specific miner because you know of that hedging. And then you use those proceeds from that short sale to buy the bullion, the gold contract. Okay? So that's why it's impossible to say at a certain price level that becomes unworkable because it's specific to each miner. Do you see what I mean?
Yes. Yes.
I mean, again, not being a hedge fund manager employing that trade limits the amount of knowledge that I can impart on that answer. But that's how I understand it. And so the trade works. If you're trading miners, you just don't want to have hedged miners. I mean, that's why Barrick paid, what was it, $1.5 billion or something to get out from under all of their hedges. I mean, if you're a miner, I mean, it works to hedge. I mean, as the question was earlier, that's what these markets are designed to do anyway, to give a producer the ability to sell forward and lock in a price so that then they know and they can plan and, you know, do all their budgeting and everything else that companies do. But in and when gold was flat and declining forever, that made sense. But now, God, if you've sold forward years of production, you really, lack of a better term, you screwed yourself. You screwed your company. You screwed your shareholders. So Barrick at least went out and raised $1.5 billion at what was gold, 1,100 or something, 1,200 back then. And God, everybody and their brother was saying, this is it. This is the ultimate bubble because Barrick's raising it. It's the smartest thing they could have done. And so, as your question relates to the miners, I guess ultimately, is there a point when that'll be unwound and miners will go up? Like I said, it's hard to say. I think what you want to do is not own hedged miners. You want to do some due diligence and find out what miners are unhedged. And if you want to own them, those are the ones you want to own.
Thank you very much. Dan
Orsini is a great guy, by the way. I feel like, it's not like we hang out and have beers together, but I could call him right now if you want me to get him on the phone. He's a really nice man. So
thanks for that.
Follow his blog.
Yeah, definitely. And thank you, Bubby. Next question is from Mulder.
Hi. Do you follow oil? And if so, what kind of price targets do you anticipate seeing hitting this year and beyond?
I follow it. We talk about it on the blog. We've talked about it quite a bit lately just because gold seemed to be attached to it. And so we needed to try to project where crude might be going, just so that we could use that information to kind of project where gold might be going. That's a temporary phenomenon. That's an algorithm-driven phenomenon. That's a managed money-driven phenomenon, and that'll change. But for the time being, and it's already started to unravel. I shouldn't make it sound like it's still going on. But there was a time 2 or 3 weeks ago where they seemed joined at the hip. So I follow crude. It's a really hard thing to try to trade. If you were to try to actually buy crude contracts, the margins are, it's really expensive. And the options are expensive. And they always have a lot of premium in them because you always have this event risk built into them, that the whole region could be on fire, by this time tomorrow, and who knows? So it's challenging.
What about ETF alternatives out there, such as DBO and such?
Yeah, there's just like the UGL and the AGQ. There is a double long crude UCO, UCO, that you can trade, and it's a double. Share price looks to go up 20% if crude goes up 10. I own calls. There's a lot of it'd be a good web bot question. There seems to be a lot of focus around the middle of May for uprisings and revolts and rage and all of that. And so I own June and July calls on crude. Again, getting back to what we talked about earlier. So yeah, I'm going to profit off of mayhem and destruction and everything else. But at the end of the day, I'm really only worried about myself and my family. So if I can make money and then convert that into physical gold and silver, I'm gonna. It looks on the chart, I guess if this was part of your question, it's going to go back up to the highs. There was a stopping point that actually, in one of my really good calls, I noticed on the chart, I think I said 113.75, or maybe I said 114. It went to 113.80 or something like that a couple weeks ago and stopped and then turned. It's going to go up there again now that it's gotten through 110. What it does there, if it goes through there, it's going to 120 something, and through there, it's going to 140 something. And what you never know is the geopolitical risk. You can think, oh yes, gold should go down and all of this, and the chart looks terrible and blah, blah, blah. And the next thing you know, Iran closes the Strait of Hormuz. It doesn't matter how great your charts look. So that's what makes it more challenging, is it's so, you can see a drought coming. So, impacts that you can't plan on in trading grains or one thing. You can't see when Syria and Hezbollah are going to attack Israel. You know what I mean?
Yeah.
That can change so quickly that it's hard. It's really hard to do.
Okay, well, thank you very much.
Sure.
Thank you, Mulder. And thank you, Turd. That May date was pretty interesting because don't know if you're familiar, Michael Rupert's saying that there might be a financial collapse before July. So that's quite an interesting mention of May. Turd, as we end this discussion, we wanted to ask you a two-part final question. You've mentioned about an EMP from the sun putting us back maybe to the Stone Ages. How worried are you about this, and are you familiar with 2012?
I am worried about that. I worry about the stuff we just talked about, the geopolitical risk and the event risk in the Mideast, because it's stuff that you can't anticipate. I can look at charts and I can, knowing like the crisis unfolding, the debt crisis, the U.S. government funding crisis and everything, that is unfolding at such a snail's pace compared to an Iran-Israel war or a Saudi Arabian rebellion or a pulse from the sun. Those things are instantaneous or would happen, overnight. Those are the things that I worry about. I can deal with what's going on in gold and silver, because it's, like I said, it's a slowly unfolding crisis, and I can plan for it and play out. I can deal with trading grains, because if there's going to be a drought or if there's going to be demand from ethanol, I can plan for that. It's these little things. That whether an EMP is likely, again, you're asking the wrong guy. I just know they've happened in the past, and it hasn't happened for a while. And if it, of significant magnitude, you could fry, half the planet, or maybe it wouldn't take up half because of the way the rays would come in. Maybe there would just be a stripe measured longitudinally where everything would get fried. I don't know, but that's the kind of stuff that I worry about. Yes. 2012, I'm a pattern guy. It strikes me as being a lot like Y2K. It's not something that keeps me awake at night. My 12-year-old daughter, she's worried about it. That does not, I don't say that as a way of decreasing the validity of anybody that is worried about it. Because I know people are, and they may end up being proven correct. But personally, no.
Okay, and so with that said, you've posted frequently about the need to prepare accordingly. Would you elaborate on that for us? Besides investing in precious metals, commodities, what else do you consider to be important to prepare accordingly for?
That term is kind of related to that sudden event, or frankly, when the U.S. debt crisis finally plays out and the dollar is devalued and we have this new currency and everything else, that will be an end point as well. Maybe not quite as sudden, but it will be an end point, and you have to be prepared for that. It's a small segment of the population that will have the wherewithal and the conviction to own precious metals to preserve their wealth and their purchasing ability. Preparing accordingly also means from disaster preparedness, you have a generator, which I don't have, frankly, but I'm in discussions to get that done. You have water filtration, so that if I need to, I can go down to the pond not far from my house and run it through a Berkey water filter and have potable water for my family to drink. I'm taking delivery on half of a cow, slaughtered, dressed, and frozen. You should probably, I guess I probably didn't have to tell you that, but so I have food. I don't have a bunker full of canned goods, but I have a pantry full of food, so that if we have to go a couple of weeks without leaving the house, we're ready. And so that's prepare accordingly is kind of a catchphrase for all of that, that we have to be, we know what, if you're paying attention, you know what the risks are. As a husband and a father and a son and a friend, it is my job to be, as we say, along the watchtower, not only preparing my personal family, but as many people as I can touch and influence. And so that's what that is.
Thank you, Turd. Unfortunately, my whiskey bottle's all finished. Thank you so much, sir. I have heard the term Turd's World in this interview instead of Wayne's World, and cover your ass in case we see Turd's bottom, a worst case scenario. I hope it's been enjoyable for you, as it has been for us. If not, bad luck, sir. Scorpion once wrote a song titled The Winds of Change. Change can often be daunting, but as stated by Roseanne Cash, the key to change is to let go of fear. One of the biggest fears for average people out there is the economy, finances, and jobs. Turd Ferguson's blog provides economic opinion and information that allows many people to understand what is happening financially in layman's terms and to help overcome their fear. So, on behalf of Fox and all the members of the WebBot Forum, we thank you, sir. In the tradition of the WebBot Forum, may you have many pies to come. Thank you.